All right, let's talk about gold. It just had an absolutely insane year. I mean, surging over 60%. But then, bam, 2026 kicks off with this brutal flash crash. So what on earth is going on? What's really driving the price of gold? Well, we're about to dig in.
And that really brings us to the big central question here, doesn't it? Are we just watching the spectacular collapse of a giant bubble? Or is this something else? Just a necessary setback, a pullback before gold really makes its historic run for that $5,000 mark? Let's figure it out.
Okay, first things first, we have to talk about gold's wild roller coaster ride. Seriously, to have any idea where we're going, you've got to understand how we got to this point.
And wow, what a ride it has been. I mean, back in 2025, gold just went completely parabolic. It shattered records, hitting this incredible peak of $4,500 an ounce. But then the new year rolls around and we get this sudden, just gut-wrenching flash crash that really shook the market.
So after that crash, we're sitting at around 43.20. But here's the thing you have to realize, and this is key. Even with that big drop, gold is still trading at more than double its pre-pandemic price. That's huge. It tells us that something fundamental has shifted in this market.
So what's different? What's changed? Well, we've kind of boiled it down to three key pillars that are driving gold's price right now. Let's break them down. All right, so what are these three pillars? First, you've got this super aggressive buying from central banks all over the world. Second, there's the whole interest rate cycle from the U.S. Federal Reserve. And third, this growing anxiety about the stability of U.S. debt. Okay, let's tackle these one by one.
Okay, pillar number one. We're talking about an absolutely insatiable appetite for gold from the world's central banks. I mean, countries, especially the BRICS nations, are just snapping up an average of 70 tons of gold every single month. And this isn't just about mixing up their assets. No, this is a big strategic shift away from the US dollar. And what that does is create this massive, steady floor of demand for gold.
All right, next up, interest rates. Look, the relationship here is pretty simple, right? When the Fed cuts interest rates, things like cash and bonds, they just don't pay as much. So where do investors go? They turn to gold. And with the Fed expected to slash rates down to 3% by the end of 2026, well, that's just a powerful tailwind pushing gold prices higher.
And that brings us to our third pillar, debt. Let's be real. With U.S. national debt hitting these eye-watering record highs, investors are getting pretty nervous. They're worried about the long-term value of currencies like the dollar. So what are they doing? They're shifting their money into hard assets. Real, tangible things like gold, stuff that actually holds its value over time.
So you've got these three huge forces all pushing on gold. The big question is, what's the verdict from Wall Street? What are the big players thinking? Let's take a look at what they're forecasting for the end of the year.
And the consensus on Wall Street, it's pretty clear. The big banks are really bullish on gold. Look at this. JP Morgan is calling for over $5,000 an ounce. You've got Goldman Sachs and Bank of America right there with them. Even the forecast range from UBS has that $5,000 mark squarely in its sights. There's a lot of agreement here.
But hold on, it's not all sunshine and rainbows. There's a catch. What's the biggest threat to this whole rally? Well, it's actually a surprisingly strong U.S. economy. Think about it. A stronger economy means a stronger dollar, and a stronger dollar makes gold more expensive for everyone else in the world to buy, which could definitely put the brakes on this climb.
So, when you put this all together, what does it actually mean for gold's role in the world? It feels like we're stepping into a new financial era. Gold isn't just that safe haven asset anymore. It's really evolving into something more. And this leads to a really interesting idea, this concept of a new price level for gold. The best way to think about it is like a staircase. It feels like we've permanently gone up a step. That old floor, back around $2,000 an ounce, that seems like a distant memory now. The whole game has changed, and gold is playing on a totally new level.
And honestly, this quote just sums it all up perfectly. Gold's role has fundamentally evolved. We're past the point where it's just a commodity or, something you make jewelry out of. In this new era, it is being treated as a core strategic financial asset. It's a shield against economic uncertainty, against inflation, and all the geopolitical craziness out there. So, that leaves us with the final massive question. You've got these powerful tailwinds from central banks and the Fed pushing it up, but you've also got this real risk of a stronger dollar pushing it down. So, what comes next? Is that $5,000 scenario pretty much inevitable at this point? Or could some kind of surprise shock send it tumbling all the way back to $3,500? What do you think? The debate is definitely on.